Hey everyone, welcome back to Corporate Decoded, the place where we decode the hidden stories within corporate filings. Get ready because today we are diving deep into AA Mission Acquisition Corp, I2's latest filing, and let's just say there are some interesting pieces of the puzzle we need to put together. And before we dive in, if you appreciate getting straight insights from these dense corporate documents, make sure you are subscribed and hit that notification bell. We also have a fantastic Discord community linked in the description below where we break down these filings further. So let's get started. Alright, so we are looking at an amendment to a registration statement filed by AA Mission Acquisition Corp, THEAG. Think of this as a company getting ready to offer its stock to the public for the first time. This particular document is amendment number 2, which means they have already filed it before and are now making changes or adding more information. It is a pretty common step in the process of going public. The company itself is registered in the Cayman Islands, but its principal executive offices are located in the Woodlands, Texas. This is important because it gives us a clue about where the company S operational heartbeats. This is the specific tracking number the US Securities and Exchange Commission, or SEC, uses. It is like their internal ID for this particular filing. Every company that wants to sell its stock in the US has to go through this process to ensure investors have all the necessary information to make informed decisions. This is the name of the company, the Accession Corp. Part is a big clue. These types of companies, often called Special Purpose Acquisition Companies or SPACs, are essentially shell companies. They are created with the sole purpose of raising money through an initial public offering or IPO, to then acquire or merge with an existing private company. So, AA Mission Acquisition Corp, THEC in itself doesn't really have any operations or products to sell. Its main goal right now is to find another company to buy or merge with. That is the story here. The S-1 form is the primary document companies file when they want to register securities for public sale. It is a comprehensive document that includes a lot of details about the company, S business operations, financial condition, management team, and the securities being offered. This amendment number 2 means they are updating that S-1. This checkbox is not checked, which is typical for a straightforward initial public offering. They are not planning to sell shares over a long period or in a continuous manner through this specific filing. Here is where we get some important classifications, AA Mission Acquisition Corp. The boxes for non-accelerated filer, smaller reporting company, and emerging growth company. Being an emerging growth company is common for new offerings, as it means they are smaller and newer, and thus allowed to follow some less stringent reporting rules. Being a smaller reporting company also suggests a more modest size. The non-accelerated filer status is also consistent with this, indicating they are not yet meeting the larger size thresholds for accelerated filing. This box is not checked, meaning they have elected to use the extended transition period. For emerging growth companies, this is a choice to delay adopting new accounting standards. This gives them more time to get ready for those changes, which can be helpful to manage the complexities of going public. This note tells us that this amendment is an exhibits-only filing. This means they are not changing the main body of the registration statement itself. They are primarily adding or updating exhibits, which are supporting documents like legal agreements, opinions, and disclosure documents. This keeps the core information consistent while providing necessary additional or revised documentation. Now we get to the heart of what this amendment is about, the exhibits. Think of these as the supporting cast that makes the public offering happen. We see a lot of important documents listed here. This is the contract between the company and the investment banks that will help sell the stock. It outlines the terms, fees, and responsibilities of both parties. And then we have 3.1. The Memorandum and Articles of Association. These are the foundational legal documents that establish the company S structure and governance rules. This refers to what the company's units will look like. Often, units in a SPAC offering consist of a share of common stock and a warrant to buy more stock later. This exhibit is crucial. It details the terms and conditions of the warrants that investors might receive, outlining how and when they can be exercised. And 5.1 you see here, this is a legal opinion from their lawyers, Winston and Strawn LLP. These opinions usually confirm that the shares being offered are legally issued and that the company has complied with relevant laws. This is a key agreement. The sponsor is typically the entity that creates the SPAC and often invests initial capital. This subscription agreement likely details the terms of their investment in the company. There are no specific financial tables presented in the provided text that we can directly analyze for revenue, profit, or cash flow figures that would allow us to delve into a Warren Buffett style analysis. This document is primarily about the legal and structural aspects of their upcoming public offering. And here at the end, we see the signatures. This is where the company's leadership officially signs off on the filing, confirming that the information provided is accurate to the best of their knowledge. We see Ching Sun as the Chief Executive Officer and Chairman of the Board, and Shibin Fang as the Chief Financial Officer. Their signatures indicate their responsibility for the accuracy of this registration statement. Now, looking at AA Mission Acquisition Corp. Thegan as a SPAC, its entire existence is essentially a pre-acquisition strategy. The filing doesn't contain operational financials because there are no operations yet beyond the administrative costs of setting up the company and preparing for the IPO. The story here is all about their plan to find a target company. The exhibits provide the roadmap for how they intend to structure this acquisition and offer shares to the public. What we can infer is that the company is in the crucial phase of preparing to go public and is laying the groundwork for a future merger or acquisition. The strength of this company, or rather its future success, will depend entirely on the quality of the target company it eventually acquires and the terms of that deal. The risks are inherent in the SPAC model. If AA Mission Acquisition Corp. fails to find a suitable target within a specific time frame, the money raised typically gets returned to investors. There is also the risk that the chosen target company might not perform as expected after the merger, leading to shareholder losses. The filing itself doesn't offer detailed financial health metrics for the SPAC itself, because its primary purpose is to facilitate a transaction, not to operate a business. The real financial picture will emerge once they announce a merger target and its financials are disclosed. So, in conclusion, AA Mission Acquisition Corp. Our FIRD is on the path to becoming a publicly traded entity, armed with the necessary legal documentation. Its success hinges on its ability to identify and successfully merge with a promising private business. It is a classic SPAC story unfolding, focused on future potential rather than present performance. What is your take on SPACs and their role in today's market? Let us know in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe for more corporate deep dives. And don't forget to join our Discord community in the description for more conversation and analysis. Thanks for watching, and we'll see you in the next episode of Corporate Decoder.